Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, that's managing to hold on to gains of 0.4%.
And beautiful day is rising, and now the rebuilding begins.
The United States is pushing for peace in the world. China is financing war.
Absolutely flat, 6 or 7 point change lower is the implied open.
Premiums that they're reporting actually on a day-to-day basis is much higher than what the street is working with.
Our advanced AI revenue this quarter exceeded $100 million mark.
First rates coming up, 25,227. The sensex at 82,400.
You're not getting valuations at the very cheap, but they are not very expensive.
We got 100% jump in equity collection vis-a-vis the same quarter last year.
If you see on a longer term period, India has been one of the best performing emerging markets.
We are investing in new products, new technologies.
Today, Tata Motors passenger vehicle business lists at rupees 400 per share.
Wholesale price index at 0.13%. Nifty around that day's low mark. We've recovered from the lows of the day, but still it's a 113-point cut. That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Nigel and Manglam. So we're not quite at the flattish opening that we had in the morning, but mid-session, just about an hour back, we had even dipped below the 25,100 mark. We'd gone down to levels of 25,060. So we're off from the session lows. But all in all, I think the sell-off in the mid-caps is pretty brutal now.
I think it's heartening to see actually that the 20 DMA at least has got defended. You know, we went down to around 25,050, and from there we did see a bit of a bounce. So that's, something to cling on to. And I think, till that 25,000 mark is broken on the downside, I think the bulls will still feel that they have some unfinished business at higher levels. The Nifty Bank has taken a bit of a pause, and that's the reason why, in fact, we are seeing some selling. But broader markets, as Reema said, you have only one stock that's advancing for 3 stocks that are declining. But there are select names, actually, that are doing well even in the broader markets. Manglam?
Absolutely. You look at some of these IT stocks as well, they're doing well. So we have Wipro for one, which has moved higher in an otherwise wobbly day for IT stocks. Infosys has inched marginally higher. And then if you look at the broader markets, some of these auto ancillaries, you have Sona, BLW Precision up around 4%. Tata Com is another one, which is 4%. Ireda up 3%. MCX has been fairly well bid. In fact, that stock has seen a big surge all through this month. It's up around 20%. And we have a bunch of these other names as well, which are doing well. Though, I take your point entirely. By and large, we have way more decliners than advancing stocks. And importantly, over the last 2 trading sessions or 3 trading sessions, what has actually seen a big spike from the lows is the India VIX. Yeah. When we started the week, it was sub 10 or closer to that 10 mark. And then 3 consecutive days, we've seen that India VIX move higher. And now, today as well, it's at one point was up around 11.5 or thereabouts. From there, it's cooled off to around that 11 mark. So we'll watch out for how this pans out, especially as we move towards the expiry session.
And just one stock that we're looking at is RBL Bank. Yeah. It's been in the ban for a long time. Today, it's a close call. It could possibly come out of the afternoon ban. Just going by the data, we'll try to revise that at around 3 p.m. But as of now, there are chances that it comes out of the ban.
It's also the Nifty weekly expiry, so that will play out in the last 30 minutes in terms of moves. But weighing on the market sentiment is the weakness across the global markets. So the Japanese markets, which were shut on Monday, they reopened after the long weekend, and they ended with a cut of more than 2%, 2.2% lower on the Nikkei. The Hang Seng was down close to about 1.5%. The Chinese market sold off. So Asia was in the red. And even as we speak right now, Europe is having a bit of a weakish Tuesday. So currently under pressure with the frontline European indices, the CAC, DAX and the FTSE down in excess of, 0.5% now. The CAC lower by 0.8%. The DAX also inching closer towards a 1% fall. So that's the risk-off globally is weighing on our markets. But let's tell you the action-packed closing bell that we have for you in the next 1 hour of trade. This is what's lined up. A down day for stocks ahead of the F&O expiry today. The Nifty is trading around 25,160. It's red across the sectors. PSU banks, metals are the top sectoral drags. Shares of Ireda are up and about following strong quarterly results.
Profits are up 42% on an annualized basis. What's driving that? A detailed fine print coming up on the show. And Phillip Capital has a sell rating on Dixon Tech. They flagged client concentration risk as domestic volumes for the largest client, Motorola, has declined. MTAR Tech is seeing some splendid news after the news of Brookfield backing the company. It's a key client, Bloom Energy, with $5 billion investment. What does it mean for MTAR Tech? Details coming up also on the show. And we'll put the spotlight on the banking sector in our special segment, Quarter Se Quarter Tak. For now, let's get in a few trading strategies in the last hour. Mitesh Thakkar is now joining in. Mitesh, you were highlighting how 25,100 is an important support for our markets. We breached it intraday, managed to claw back well above that level. Did you take any trade as we went down to levels of 25,050? And now what are you doing?
I haven't taken any trades, but we recommended buying around this 25,100 with a stop below 25,000. And the idea was that you might have an intraday decline below these levels, but as long as it's held on a closing basis, my belief would remain on the positive side. So I still maintain that the overall market bias is positive, and it's until we get a closing below 25,100. Now, on the upside, similarly, the breakout happens about 350, 400 zone. So these are the two counters to watch for any kind of directional move. On the stock side, I have a buy on HDFC Bank with stop at 974. Look for a target of around 1,000 here. And the second stock which I like, that's also a buy call, that's on Indigo. Indigo is something which I would recommend buying for targets of around 58.70 or thereabouts. One can, possibly keep a stock just below levels of 57.40, 57.39.
All right, we take that point. But meanwhile, important, information at the bottom of your screen. The RBL Bank clarification has come in on reports. Reports of Emirates NBD's purchase of the company resurfaced last evening, and now the company has actually gone ahead and clarified on these reports, saying that there is, nothing that has happened that warrants this kind of disclosure. So the article which came by is incorrect. The bank is always on a growth trajectory, routinely explores opportunities. They're not aware of any info that requires disclosures at this stage. So basically, they're not denying. It is a routine reply that has come in to the exchanges. They obviously are looking to, go ahead and engage with external opportunities that would come by.
Yeah, they're keeping it very open, actually, right, in terms of the communication out there. But the street clearly is sensing something.
Yeah. I mean, the stock was in F&O ban on the last day of the previous series and the new series as well. Typically, when you start with a clean slate, this was the only stock that started with the F&O ban. So definitely the street. And in fact, yesterday we spoke with Jakes in the Market Mehfil show. He said that the theme for this year for him are some of these banks where there is likely foreign investment coming in. So that could be one of those things.
All right. So we'll have to keep an eye on that. And Mangalam, everyone was saying September wasn't a good series. This stock actually didn't get hurt. So that's the way the street is positioned. If you just pull up a last couple of months chart, you'll see that, that's the one that should be in a radar. Mitesh, I want to quickly ask you about RBL Bank. The stock has had a big run. The street is sniffing something. They're leaving it open-ended as well, going by the clarification. So any view on that name? And I'm not sure whether you track this one, Power Mech. The stock saw a one-way correction. And that one has suddenly seen a big spurt up in terms of volumes. And, it appears there is big volume on that one as well. So either of the two.
I'll take RBL Bank because the other one I'm not tracking. See, RBL Bank, if you look at the historical charts, the last significant high had a weekly closing of around 290 and 291, which was one of them was on 15th of December 23, and the other one was 12th of January 24. And we are back to those levels of around 290, 291. I think a weekly close above this will definitely be positive. But for the timing, I believe that this should be some kind of a pivot, which could be an important supply area. This 290 to about 295 kind of a zone. But once we clear that, the stock goes into all-time highs without any kind of historical, not all-time highs, but multi-year highs, but without any kind of historical resistance till the levels of around 360. So I'm quite positive over here. If somebody is holding, a good way to be, would be to take at least 25% off the table. But otherwise, once it gets a closing about 295, expect this rally or up move to extend.
It's 85% up so far this year. What a move on RBL Bank. But let's talk about IREDA. Strong set of Q2 numbers. Gaurav is now joining in. Gaurav, it looks like an all-round beat. There's very strong growth. The asset quality is improved. Give us the numbers.
Well, as when we look at the numbers, first let's talk about the profit ratios. Net interest income that increased almost by 50% on a year-on-year basis, while operating profit that increased almost by 55%. When we look at the provisions now, we have seen some kind of decline, around 80% decline on a sequential basis in terms of provisions. And at the same time, profit, when we look at this figure, that is also up almost more than 40% on a year-on-year basis. Looking at the ratios, it seems that the gross NPAs and net NPAs now they are under control. We are seeing some kind of cooling down effect in these ratios. Remember, last quarter, bank actually reported, IRDA actually reported spiked numbers in terms of gross NPAs and net NPAs because of one of the accounts from FY20, but it seems that it's cooling off. At the same time, net interest margins, now they are also expanding almost by 12 basis points in this quarter on a sequential basis. Lastly, let's not forget that IRDA already had given their disbursement and sanction number. We had seen a strong performance there. Loan book that has increased almost by 30%. So all in all round, if you look at it and the numbers, it was higher than the street's expectation and also better in terms of the Q2 that we have seen for IRDA. And as a result, we are also seeing market cheering up for this stock today.
Indeed, market is cheering up for that stock as well. Though we can't deny the recovery that we're seeing from the lows on the frontline index. When we started the show, the Nifty was down almost 70-75 points, which itself was a recovery from the day's low. But now as we speak, it's down about 60 points. And a large part of that recovery can be attributed to some of these IT names which are picking pace and a couple of these FMCG names as well. Case in point, Tata Consumer. That's the one that should come up for you on the screen. Not a big weight on the index, but we are seeing some sentiment reversal in a couple of these names. Tata Consumer at the high point.
Just one stock, Mastech, because Infosys won a large £1.2 billion order from NHS for workforce transformation. And typically, we've seen Mastech do a lot of work for, NHS, the UK government, etc. So not sure if the two were competing, but just saying that this was largely a space which Mastech used to occupy, this, UK NHS kind of orders. And now Infosys has won that large 15-year contract. £1.2 billion is the order. But IT is doing very well, right? It's not just HCL Tech. Even Tech Mahindra, ahead of numbers, is surging.
And I'll be looking at Reliance, though. Towards the end of this week, the company reports its numbers. So ahead of numbers, typically we see some action in Reliance. And if Reliance can move higher, would obviously take the Nifty higher as well. Dixon Tech, that's the one stock which is under pressure right now. There's a Phillip Capital note which has come in on that one. What we'll do is we'll get to the details of that note in just a bit. But right now we do have with us Dharmesh Kant, who's the head of research at Chola Securities, joining in. Dharmesh, thanks a lot for joining in. What do you feel about the market right now, individual stocks, RBL Bank in particular? Got to ask you that because, the stock's been doing well. There have been reports of this stake sale to a foreign bank. Do you think that happens, doesn't happen? Whether that happens, will this be an investable idea?
Yeah, good afternoon, Mangalam. Thanks for having me on the show. The RBL Bank stock price has moved quite a lot, but the bank has been plagued with series of their own set of problems. If you look at cost to income ratio, it was from 63-64%, which still was higher. It has moved up to 72% as of now. And at the same time, the asset quality has been a concern for RBL Bank. Credit cost last quarter did decline, and the bank is, poised for restructuring. The biggest problem has been the unsecured book, which around 27% of the book is unsecured, and 17% comes from the credit card business. So there are structural issues which, they are facing, and they are trying to address that. 9% was the advances growth, this quarter, which they have reported. I think, it would be prudent and very good for a bank like RBL, which gets a handholding from a senior, partner, as has been the case, because anyways, the senior top management of RBL Bank has always been not unstable kind of a management has been there, and there has not been any guiding force to carry the business forward. So if the deal happens and it, materializes, it would be, better and a prospect for the RBL Bank. And this will be, again, if it does go through, then it would be third in the line after Yes Bank and Saman Capital. And now we're hearing this for RBL Bank. To my mind, it would be better for RBL Bank if it gets a senior, partner out there.
All right. What about IRDA? Did you track that one? My colleague Gaurav just spoke about that.
Yeah, good afternoon, Nigel. IRDA came out with a very stellar set of numbers. Whichever way you look at it, the numbers were great. And that comes in the light of the stock price has taken a serious, correction from all-time high. It's down 45%. Even year till date, it's down around 25-30%. So it gives you a good, value buying opportunity with that kind of return on equity ratios they are sitting on, and P multiple has also normalized to 28, 29 times. Renewable energy is the segment to be in. Government of India focus is there. It's a fast-paced movement has started happening. Earlier, there was land acquisition problem with like NTPC Green and all, which is no longer there. So I think offtake of, loan book will be quite high, and IREDA will continue to compound at 25-30%. At 4 times price to book on a TTM basis is not, expensive. I think the stock is in for re-rating, and maybe 20-25% kind of an upside by the time we end this fiscal FY26 is very much on the cards.
All right, take that point, Dharmesh. Hang in there because we have a couple of other stocks as well to discuss with you. Meanwhile, Hotel Leela results at the bottom of your screen, 12% revenue growth, 20% EBITDA growth. The bottom line has turned into a profit versus a loss. That's largely on account of their finance costs coming down substantially from about 120 odd crores to 38 crores. And that's the kind of delta that we've seen in the bottom line as well. But for the hotel industry, the second quarter has been, more or less a routine quarter, one of the weakest for the year for all the hotel industry. So we don't expect much in terms of movement coming in here. The business end for this business starts third quarter and fourth quarter, and that is where you would see more growth play out. And for Leela in particular, over the next few years as the new properties come on stream as well. But the stock under pressure, Dixon. Let's go across to Upasna, who's waiting by with all the details from the note that has come in on Dixon from Philip Cap. Upasna.
Well, yet again, Phillip Capital has come up with a sell rating on this stock with a target price of 9,085 per share, which is a downside of nearly 45% from the current market price, highlighting the same bit that was highlighted earlier by the brokerage, that is the declining volumes in terms of the company's key client, that is Motorola. The brokerage says that the domestic volumes for Motorola declined in Q2 FY26 and company faces significant client concentration risk. Now, if we look at FY25, 80% of the company's mobile revenue was contributed by Motorola, which is down to 60% in this quarter, that is Q2 FY26. This is mainly due to a Y-on-Y fall in domestic volumes as Motorola and other Android brands are facing rising competition from Apple. In Q2 FY26, Motorola has outsourced 18% less domestic volumes to Dixon on a Y-on-Y basis, mainly due to increased outsourcing to Carbon, is what the brokerage has highlighted. Now, Dixon is set to miss its guidance given in Q1 FY26, that is a 15% sequential value growth in mobile phones, primarily due to a volume decline in Motorola and also a loss of wallet share that is seen from Longcheer and Xiaomi. It has also said that the consensus FY26 PAT estimates is around 1,200 crores and it expects a double-digit cut in these estimates in the coming quarters. Hence, it has given a sell rating on this stock yet again.
Thank you very much for explaining that. Dharmesh, did you have a chat with Dixon over the course of this quarter with the management of Dixon? And this, loss of, the decline in volumes in Motorola, how much is it likely to hurt? What is your own research telling you? Because it's also a stock which in a way is priced to perfection after the kind of rally and the valuations it enjoys.
Yeah, I mean, the valuations are pretty high. We did not have a chat with the management of late, but this is a silent period, so post-earnings, we intend to do so. I mean, the only caveat out here is the report has been very bold in, pricing it at a much lower, cutout there. I don't think that much damage will happen because it's not only Motorola, which is the client. There are so many in the basket, and if one client loses a market share, other may be gaining. So there is OnePlus as well, Samsung is there, Xiaomi is there, and Toshiba, BPL. There are many clients who are there in the business and at entry-level mobile segment as well. So specifically speaking for the mobile kind of a business, some small hit can be there, but I mean, it's very difficult to say that only Apple will gain market share, and that's because of that you can call a sell rating on Dixon. Valuations were high. It has always been pretty high, but it's one of the finest EMS player presently available in the country, and they are targeting all the diversification whichever is possible. So not only it's LED TVs and home appliances everywhere they have been getting, and not specifically concentrated to a particular vertical. So our sense is if it corrects some more, I mean, wait for the Q2 earnings, and post that if a correction takes place, then definitely it becomes a buy because management has been pretty aggressive, and we are, we give benefit of, call on the management that they will come out of this pretty well.
Okay, all right. Dharmesh, thanks a lot for joining in this afternoon and giving us all of those details. By the way, KEI is a stock I think that should come up for you on the screen. I think the stock suddenly saw a big uptake in the last few minutes. I think that one should come up for you. And MCX as well, there's some positive news flow that's been coming in periodically. That's another way of playing the commodity space as well. And the premium, as we were highlighting earlier today as well, on a day-to-day basis has been moving up. Q2 was higher than Q1, and Q3 as well, last week was much higher. The other one is Power Mech, the one that we had highlighted earlier as well. One-way correction in the last 1 year or so. I think it's down close to around 20% from the recent peak. Pull up the one-year chart. Today, the stock is moving up on large volumes. But you pull up a one-year chart, it's been a rank underperformer. So giving up some part of that underperformance from the peak of around 3,400. Sharp downtick is what we have seen. But let's focus on the start of the day. LG Electronics, it made a stellar debut on the bourses, listing at a 50% premium in comparison to its issue price. My colleague Shilpa Ranipeta spoke to Mr. Sanjay, the Chief Sales Officer at LG Electronics, on the company's growth and the margin outlook. Let's listen in to what he had to say as we take that short break.
LG is a very big company. It's at a 2.9 billion level. And such a big company, you can't see a linear growth. I mean, there would be some fluctuations, but the best part is we are market leader. And even this year, we further improved our market share for refrigerator and TV in the tune of 1.5 to 1.6%. Air conditioners, we improved by 1%, microwave 1%, and for washing machine 0.1%. So it shows that a company, even after 28 years, improving their market share. So it indicates that we have not built our organization on the basis of some short-term disruption.
Right.
It has been built through a very long-term vision and strategy. Our current localization is 54%, and every year 2 to 3% it will improve.
Correct.
And the biggest strength which is contributing to our margins are major key components we manufacture in-house, like compressors or heat exchangers or some assemblies, sub-assemblies. In India, the premium portion of business will grow as the premiumization is happening. And as the premiumization will happen, LG will be the biggest beneficiary due to its premium positioning. And with the premium price, business will grow, your margins will improve because the margins are relatively better.
Welcome back. We're down only around 50 points as we speak. So there's a good pullback. Titan is another stock actually that spiked up in the last few minutes. So I think Titan is the one that should come up for you on the screen. But the action really is in the broader markets. And as always, Hormuz joins in. He's going to put the spotlight on some big movers. Hormuz, take it away.
You know, some of the beaten down names are springing up among the list of gainers today. One of them is Carraro India. It's a recent listing and is the biggest single day gain that the stock has seen since April. The stock is up 10% now and it's gained in 3 out of the last 4 trading sessions. Volumes are the highest in a month, but 13.5 lakh shares of Carraro India have been traded. The 20-day average here is just 2 lakh shares. But despite this move, the stock is still down almost 30% from its IPO price, which is at 704. Now, Repro India, we spoke about this last Monday as well, and since then the stock has been on a bit of a gaining spree. The 7 out of the last 9 sessions that the stock has gained. It saw a similar double-digit move, as I just mentioned, last Monday as well. It's up around 9.5% today. But today's volumes have already crossed last Monday's volumes, and so as a result, today we have seen around 4.2 lakh shares change hands. Last Monday, we had close to 3 lakh shares change hands. And this 4.2 lakh shares comes on a 20-day average of just 25,000 shares for Repro India. It's almost turned positive for 2025 now. It was down almost 40% last year. And lastly, Landmark Cars is reacting to its business update, of course, today. The stock is now up 10.5%. It's the biggest single day gain in 4 months for the stock. The volumes are already the highest on record. Had more than 50 lakh shares that have traded today on Landmark Cars, 20-day average being only 50,000 shares. And the stock took support at its 50 DMA and has rebounded from those levels. And courtesy of today's move, the stock has also turned positive for 2025 after declining around about 25% last year.
Thank you very much for that. Let's talk about markets and where we're headed. Alok Ranjan, Head of Equity and Senior Fund Manager at ITI Mutual Fund, is now with us on the show. Thank you very much, Alok, for joining in. We often speak to Rajesh, so it's good to see you on Closing Bell today. So you track you manage the large cap and the large cap mid cap fund at ITI Mutual Fund. And I was just looking at your large cap fund. It's fairly diversified. You've got about 65, 67 stocks in your holding, well spread across financial stocks, consumer, you've got autos, you've got, IT heavyweights. I mean, what's the broad call that you're taking at ITI now in the markets for the next 12 to 18 months and the sectoral composition of your portfolio?
Thanks, Reema. So to mitigate the risk, we need to be diversified. And whenever it is large cap, you know how the movements happen. So typically large cap stocks would have 60 to 80 stocks in portfolio. Of course, sectorally also we are diversified because in the last 1 year, if you see how the markets have moved, there are no clear outperformers, and definitely, one has to be bottoms up because market is not decisively very attractive. It has not corrected very significantly, and most of the correction has been time correction. And as far as valuations are concerned, now we are almost fair valued or maybe a little bit more attractive than fair value. So that is how we are going to see. So that is what we see in our portfolio. We are invested pretty much across sectors. Of course, there have been pockets of overweight and underweight concentration.
So to beat the index returns and to generate that alpha, because you are broadly diversified, how do you intend on doing that? What are your big overweights? What are your big underweights? What is the call that you're taking?
Right. So you might have seen in capital goods stock, we have remained overweight, especially during last 3 to 6 months. So whenever you have to do bottoms up investing, typically capital goods sector is a very, very wide sector. It has got several pockets. So there are pockets of defense, there are pockets of power T&D, and then there are pockets of basically industrials. And if you are overweight that, then select stocks in those sectors have outperformed. Then automobile, most of the industry was underweight, but you see how things have happened in the last 3 months. The government has given some incentive, and the sector was doing so badly that government has to come up and do something. And now we have seen how auto stocks have done in the last 3 months. So that is pretty much also reflected in IT sector. Things have not gone well for the IT sector, but now we have started coming to a stage where it may not look very good. At the same time, valuations have also corrected quite significantly. So maybe the underweight extent has to reduce, and slowly we need to go around equal weight or something like that.
Okay, all right. Hi, Alok. Good to speak to you after a while. Nigel on this side. Alok, how do you approach the consumption basket? The street seems to be divided. Some believe that some of these staples haven't done anything. Maybe a case for review. The counter argument is they're not going to grow much, so why to look at them? You rather go for the discretionary names. How are you all positioned on the consumption names?
So again, you see consumption has several pockets. So if you see staples, it's true that it has corrected, and it's true that government has given some incentive. There have been tax deductions, extra money in the pocket of consumer. Everything is fine. But at the same time, if you see how the companies are growing, companies are typically struggling with 5% volume growth also. It's very difficult for them to achieve that. So in consumption, if you see staples, we are not gung-ho on that, and there we are underweight. At the same time, if you see consumer services and consumer discretionary, we are quite overweight there, and that is where we are quite optimistic and bullish.
All right, so you're bullish on consumer discretionary, not so much on staples. What about the auto pack? And, as we move towards post-monsoon, what would you say of cement? Do you think that, infra demand will pick up, that will cause some price hikes in the cement business, volumes? So on cement and autos, what are your thoughts?
Right. So if you see auto, entire industry was almost, there was a consensus underweight. And everybody was expecting autos to do badly, but then came this GST incentive. And if you see auto numbers, they have not been doing well for the last 5 years, 7 years. In fact, in some of the automobile sector, you'll see that number. In absolute terms, they haven't grown beyond 2015. So for the last 10 years, there was a build-up in demand, but at the same time, industry was not doing that well. Now with this kind of incentive, you must have seen, comments from several companies. I cannot name those companies, but you see all the large cap auto companies. The numbers are extremely good, and this is something that is going to continue. And the same is also reflected in the, you see, automobile index. It's high for the year. And all this has happened in the last 3 months. So that is why we need to be fairly diversified. At the same time, the top 3 or top 4 large cap stocks, they are going to do quite well.
Okay, all right. Just a quick question on the cash levels that you all are sitting on, Alok?
Cash would be typically 2 to 4%. That is what we typically maintain. We don't take, as a policy, as a house, we don't take large cash costs, because that can create extreme volatility in the portfolio performance. So we think pretty much we are invested, but 2 to 4% cash generally we try.
Fully invested. Got that, Alok. Good having a short but effective chat. We have lots more questions for you, but that for another session. Thanks a lot for joining in. Well, for the time being, I'll tell you what, I think we should slip into that short break. Come back. We'll continue to focus on markets. We'll also get you a technical call with regard to what to buy for a reverse trade.
Welcome back. The Nifty's once again gravitating lower, 25,150, a cut of close to about 0.3%. Mitesh is back with us for a few BTST calls. Mitesh?
So, the Nifty, as you were rightly highlighting, has failed to give any kind of a decisive move, just that it's managed to hold on to this 25,100 level, which is what we were suggesting will be an important level on closing basis. So, kind of bounce back from there. Therefore, more trading should be, kind of focus on the stock side, and the calls that I have right now. I have STBT on in Petro. If it breaks today's low, which is around 440, so sell below 440, just bounce back a ₹1.50. 440 below 440, sell with a stop at 444. And look for a target of around 435 to about 432. And ICICI Bank is a BTST. Keep a stop just below levels of around 1376.5 and a target of 39.5.
All right, Mitesh, thanks a lot for that. 20 minutes to less than 20 minutes to go for close. Nigel, weekly options expiry. What's the FNO setup like?
Well, that's right, Manglam. It appears we're in a bit of a range. And if you just look at the high and the low of today, you'll see that, in fact, the markets is getting into that buy on dips mode. Yesterday as well, there was a buy on dips, as well as in today's trading session. However, that 25,350 appears to be a bit of a zone out there. And even in today's trading session, we went to around 25,310. A few sessions ago, we went to around 25,330 and we did a U-turn from there. So in the near term, that's a bit of a resistance zone. However, at around 25,000, 25,050, which is where the 20 DMA comes up, as that screen is telling you, that's the level that, in fact, is a crucial support zone. Now, individual stocks that I'm looking at, IRDA, that's a stock that's up close to around 3%. It's seen a massive correction from the top. And as of now, you still have shorts that are sitting in the system. Open interest is up by close to around 10%. There's fresh buying on that one. MCX, another stock that's moved up. It's up close to around 5% the last time I checked. And the open interest has swelled up on that particular counter as well. So that's the stock you're looking at. Now, in terms of stocks that could move in and out of the FNO band, it's touch and go, actually. RBL Bank is on the verge. There's very high probability that today or tomorrow it goes out of the FNO band, which it has been over the last few trading sessions. And SAIL, the last time I checked, it's touch and go. That as well is approaching 95% of its market-wide position limit, which effectively means the stock could possibly come into the FNO band. So touch and go on both these two. RBL could very well be out of the FNO band, while SAIL could go in, but very, very close.
Got that. Thank you very much for that. Bank of Maharashtra, which reported the numbers, is sold off close to about 4.5%. But a couple of the other banking names are weak too. So you've got a Bandhan Bank, which is subdued in trade, UCO Bank, Yes Bank, South Indian Bank, all down close to about 3%. Bank of Maharashtra's numbers were not bad, seemed pretty stable, but you are seeing weakness there. And the other one is Just Dial. Came out with numbers yesterday. It's been weeks since morning. The problem is growth for the company is very, very subdued, just about 6%, and it's been in single digits now for the 5th consecutive quarter, so over a year. But the stock to watch today will be Tech Mahindra, because it comes out with numbers. Now, both TCS and HCL Tech actually came out with a decent set of numbers. There was a beat on the company's top line. In the case of Tech Mahindra, we're working with a 1% revenue growth, and this comes on the back of 2 consecutive quarters of a revenue decline. Margins for the company have also been on an improving trajectory. Margins had gone to as low as 4.7%, sub 5%, and they've been steadily increasing. This quarter, we're expecting a 60 basis points margin expansion to 11.7%. What is aiding is the rupee depreciation. But other than that, the company has been trying very hard to get its margins back up to the industry average by exiting some of the low margin projects, getting in cost efficiencies. So margins have been on an improving trajectory, and this will drive a jump in the company's profitability by nearly 15%. Now, if you remember, Tech Mahindra is a work in progress kind of a company. There is a turnaround which is underway after Mohit Joshi took over. He gave himself 3 years, and he said at the end of 3 years, that's FY27 end, the revenue growth of Tech Mahindra will be at par with the industry or industry leading, and margins will come up to 15%. So every quarter we track the progress the company is making towards achieving this end goal of, industry leading revenue growth and EBIT margins of 15%. So that's about, Tech Mahindra this time around. But I think the other big one is going to be Axis Bank, and in just a bit we'll get to the expectations.
All right, so we'll wait for Gaurav. He'll give us the expectations on Axis Bank. But Jay Bala of Cash the Chaos joins us on the show. Jay, You have been saying that this market actually, wow, that's a nice shirt, Jay. Nice and pink. All right. So, Jay, the markets, you have been telling us that it actually eventually is going to be testing those higher levels till, I think, 24,000, 24,300 is the level that should be protected on the downside. You're as bullish?
That's right, Nigel. I'm bullish from a medium-term perspective, but the short term, the markets are coming to headwinds. Like I pointed out last week, the global macros are likely to put pressure, and we saw the US markets cave in on Friday. I think that is the beginning of a short-term correction for the US markets. From where the US markets closed on yesterday, the 30th of October, I see a further drop to about 6 to 10%. So that can put short-term pressure on the equity markets, and that's the minimum I'm anticipating. I think the markets should hold off at the minimums, and I'm bullish for the rest of the term for markets heading into 2026.
Okay, bullish, for some more time now. Globally, is there a risk that, say, the US markets run out of steam? Everyone's questioning whether this entire AI theme is in a bubble. There have been a circularity of deals in the data center. Too much money has been committed. Look at OpenAI, $1 trillion in terms of, spend, in terms of deals that they've signed for a company which is perhaps going to generate $20 billion in terms of top line. So since you look at the, global technical indicators also, what's the mother market going to do?
That's right, Rima. See, the bubbles can last much longer than people anticipate. And right now, with the evidence from the charts, I believe this so-called bubble can last at least till middle of 2026. So what we could see as headwinds will probably be just an interruption in the bull market. And we are likely to see, like I said earlier, the US markets drop somewhere about 6 to 10% from yesterday's close. And all three major indices, and even the AI housing stocks index, that's also pointing to a similar picture. So I believe for the bubble to pop, a little more time is left, at least a couple of quarters in my opinion. So I will still remain bullish because there are sizable gains to be made on the long side. So the Nifty, in relation to the global structure, it might just either meander between 25,500 to 23,000, or the short-term trend line. If you draw the trend line from the all-time high of 26,277, that falls through exactly at the September high, and last week's high of very, very close to that September high. Nifty can manage to take out this high of September. I think the Nifty might outperform the global markets, but that's not my base case. I'm a bit cautious. I'm anticipating some pullback to come through in line with the global equities. I want people to book profits that they've made in the last few months and then reduce positions. Not go to 100% cash. You can still be somewhere between 50 to 75% long.
And what about gold? We saw a decline in some of the metal prices today, including gold. Do you believe that it's just a correction in an otherwise uptrend, or maybe it's topped out?
Not yet topped out, but it's starting to look parabolic. So that's a danger sign. And if you look at the monthly RSI for gold, it's at 91, and it's sort of unprecedented levels. And the most important thing is we don't want prices to go parabolic. We've seen 20% rise in the last 2 months, and that's a danger sign. It needs some cool off, and I'm anticipating some cool off to come through. Right now, there is no reversal signature. So you need to keep trading stops for London gold at 4,000 odds and London silver at 49 odds.
All right, Jay, thank you for joining in. Just stick with us. We'll take a short break, come back, discuss more market with you on the other side, and also thereafter in Markets Forward. Take a short break, come back.
Welcome back. Well, we are still in conversation with Jay Bala of Cash to Chaos. Jay, as always, it's a stock-specific market. What do you have for us today? Give us 2 picks.
Yeah. See, before I give 2 picks, Nigel, I just want to make it clear that the markets are possibly late stage of this short-term cycle. So you might want to book profits and take that profits and try to put in these 2 new positions. That way you can position size accordingly, and your position size will be small in that sense. So from that point, I have Tata Communications. It's looking quite interesting from a short-term perspective. A stop loss of 1745 for an objective of 2100, possibly fresh 52-week highs and new all-time high. And the other stock I have is JK Cements. This is also looking strong within the cement space. Stop loss at 6202 with an objective of 7735.
All right, Tata Communications and JK Cement, your 2 stock calls. Jay, thank you so much for those picks and your views on the market. We continue our conversation in Markets Forward. But before that, we have closing and some results to contend with. And speaking about results, in our special segment, Quarter Se Quarter Tak, ahead of all the big bank earnings this week, we have Axis Bank tomorrow as well. Gaurav joins in to take us through the key expectations from the banking sector this time around. Gaurav, most of the companies have reported their second quarter update.
Well, yes, when we look at the bank, let's understand that the results are underway, and when we look at the pre-quarterly updates, now the update looks fairly balanced. When we look at Kotak Mahindra Bank, that is leading the pack with healthy growth of around 16% on a year-on-year basis in terms of loans, while HDFC Bank loan book, that has finally caught up with its system growth at around 10%. Among PSUs, we saw Bank of Maharashtra, UCO Bank, they actually reported the double-digit run, and at the same time, EU Small Finance Bank, that continued to clock more than 20% loan book growth. In fact, most of the PSU banks, they have delivered in line growth with the guidance, and some even beating it. But not everyone had a good quarter. IndusInd Bank, Utkarsh Small Finance Bank, they reported contraction in its loan book. Union Bank, even this bank actually reported a slowed loan book growth at just around 5%. Now, as we head into results, let's understand what we can see. One can expect double-digit loan book growth for banks like SBI and ICICI to continue, while on the other hand, Axis Bank and Federal Bank, now there we may see single-digit growth even in this quarter. Margins are where the pressure is actually building, because net interest margins, they are expected to drop anywhere between 5 to 30 basis points. But the good news here is that we may see them bottoming down in this quarter, considering no further rate cuts. Now, the sharpest compression could be seen for Bandhan Bank, as we will also remain watchful for banks like Axis Bank and EU Small Finance Bank. And for the names like SBI and Federal Bank, we're expecting to see the impact limited between 10 to 15 basis points. And for the large banks, the impact is going to be somewhere in the 5 to 10 basis points. When we look at some of the surprises, now we may see silver lining here in terms of RBL Bank. We have already seen some news flows, and there could be this could be the bank where we may see NIM expansion this quarter, and this is all because of the faster asset repricing for the bank. On the asset quality front, there is some relief actually. Credit cost, it is likely to ease sequentially. However, it is still important to see how the banks are going to perform who already had elevated credit cost last quarter. And for slippages, which spiked last quarter because of agri-seasonality, now it is expected to come down, and this time it will be favorable because of the agri-seasonality and better rains that we have seen. And expectations are also working around the improving stress in unsecured retail segment, including the MFI. Now let's come to profit. Profit growth, we may see some kind of subdued performance from the bank. The banks like ICICI, HDFC and PNB, they may post marginal gains, but on the other hand, SBI, Axis Bank, Kotak Mahindra Bank, Federal Bank, these are the banks where we may see profit falling on a year-on-year basis. It is likely to be a tougher quarter for IndusInd and Bandhan Bank, because Street is expecting profit to decline anywhere over 50% on a year-on-year basis. Remember, there is one more thing to consider, is the treasury income. Last quarter, we saw treasury income provided a big boost to PSU profits in first quarter, but in this quarter, that is unlikely to happen because of the rising yields, which could keep the gains muted. And that is why we should also see how the gains are going to remain for PSUs. Remember, last quarter, the treasury gains accounted for more than 20% of their total PBT for banks like Bank of Baroda, Canara Bank, PNB and Union Bank. So what should investors be tracking this result season? 2 themes that we should be working out on. First is the net interest margins, which is likely to bottom out in this quarter. The full impact of the 50 basis point repo rate cut in the June will show up this quarter. And second is that the credit growth slowdown. We have already seen analysts are actually building up the credit growth expectations anywhere between 11 to 30% for the full year. So definitely that is something that we should be watching out for. Specifically on the stocks, I will be watching out on Axis Bank, which has been stuck with the single-digit loan book growth. IndusInd Bank for management commentary under new leadership, and also in terms of growth, I will also watch out for Kotak Mahindra Bank, where NIMs and credit costs actually disappointed last quarter, and PSUs to see any kind of impact which is expected because of the lower treasury income. So to conclude, when we talk about second quarter, earnings growth, it is holding up. NIMs, it is likely to be under pressure. Asset quality is improving and profit is likely to stay muted for now. But the silver lining is margins could bottom out, credit growth is inching up, and the second half of FY26 may finally bring some tailwinds back in the banking sector.
All right, thanks a lot for that, Gaurav. Second half of this year will bring some tailwinds for the banking sector as credit growth looks like it is picking up and markets likely to expand as well. We'll watch out for how it pans out. Though it's time to now start beginning to wrap up on the market right now. 103-point decline is what we have for the Nifty right now, near 400 points. So yes, it will go down as a red tick, but more importantly, it's a tick where we saw demand at lower levels and supply at higher levels. So it was a range-bound session in that regard. The expiry belongs to the bears this time around. The mid-cap index, that was the bigger casualty of today's trading session. Nearly 2,200 stocks, which declined for about 700 stocks, which ended higher. All the sectoral indices ended in the red today. So we had the Nifty Bank as well as the Nifty IT index, along with all the other indices as well,